Well, let's turn our attention to another IT company, L&T Technology Services. Well, it reported actually a weak set of numbers in the past quarter. The EBIT margins contracted marginally. In fact, the FY25 guidance as well is lower than estimate of around 8 to around 10%. Mr. Amit Chadha, the MD and CEO at L&T Technology Services, joins us on the show. Hi, Amit. Good morning and thanks a lot for joining in. Well, FY25 guidance appears to be modest at around 8 to 10%. Can you explain this guidance?
As I go through, if I may just step back for a second and tell you that, look, if you look at the current quarter, probably the best quarter in the industry and definitely a good quarter for us compared to a lot of other quarters we've had, 5.1% sequential growth, right? 17.9% growth in constant currency of the year. Profit margins as well have gone from 1,000 crores 2 years ago to 1,300 crores, so about 1.3x. Deals we'll talk about, but if we look at next year, we are definitely seeing a lot of positive energy, a lot of positive spend coming to us in software-defined vehicles area. We now work for 8 of top 10 automotive R&D spenders. We also are seeing a lot more work coming to us in oil and gas, CPG and chemicals because they are spending, right, big time. We are also seeing work on a horizontal basis in software-defined everything, embedded systems and digital manufacturing solutions. Hyperscalers as well as semicon companies have given us contracts, and we are, our pipeline is fairly healthy. There's a little bit of concern in industrial products. There's a little bit of concern in the comms area, and therefore, even though our guidance of 8 to 10% sequential constant currency for FY25 is higher than where we had started on for FY24 in organic terms, but that's where we are right now, and we'll the year is just started yet, and we will continue to provide color as we move forward.
Your constant revenue run rate currently is $1.2 billion. Your aspiration is of hitting $1.5 billion by FY25 end. Does that aspiration still hold, and how do you plan to achieve it?
See, when we had given you the guidance for FY25, this was 3 years ago, we had given you a guidance of $1.5 billion. So we're giving you 3 numbers. We had talked to you about 18% EBIT, we had talked to you about 1 billion run rate, we had talked to you about 1.5 billion run rate. So 2 of those 3 we achieved. Now, third one is a 1.5 billion run rate. We are fairly comfortable at the stage of maintaining that aspiration. And that is basis the fact that we continue to look at various acquisitions and various other means. And as we move forward through the year, we are taking steps to be able to see if we can meet that aspiration.
Got that. So where are you on the M&A front, and how soon can you close an acquisition? Because last time, you said that you were working on some inorganic elements as well and expected to share more details by the end of the quarter, which is this quarter.
So there are various things that we continue to do at this point of time. There are various candidates that we continue to look at. And we do believe that we will make some moves in this area. That's where we leave it right now. But I can assure you that there is a lot of work being done in the organization in this area. In fact, if I may, I would like to switch and talk to you about our reorganization that we've just done, which is significant for us, if I may. So we've actually taken the company and we have turned it into 3 segments to make it simpler, as well as make sure that we are able to go deeper to scale. So we've actually made the company in 3 segments, as in mobility, sustainability, and high tech, and then taken 3 horizontals across, which is AI and software-defined vehicles, embedded systems, including VLSI and digital manufacturing solutions. We believe, and then we've taken sales and delivery together and put it under each of the segment heads. We believe this will provide us the ability to come closer to our clients, get faster in decision-making, have faster agility. And as each of these 3 segments have got varied competition, we should be able to come up better as compared to competition and gain more market share, improve our growth trajectory. So I just want to share that we rolled that out recently. We are notified. The last bit was put together today, and we have notified the exchanges as well as you go forward.
Okay, all right. Amit, let's turn our attention to the margins then. There has been a 30 basis points margin drop on a sequential basis. Explain that in a little bit more detail. And also, a medium-term aspiration is to get to around 18% EBIT levels by the first half of FY26. What could the exit margins look like for FY25?
If we look at the margins, we've been fairly consistent in the 17% levels in EBIT. Before I go there, if I discuss PAT, right, the absolute number, we've gone from 1,000 crores to 1,300 crores in about 2 years' time, right? That will continue to go on and increase as we move forward. So I don't see any doubt there. We are making investments in our business in a deliberative manner, able to make sure that we are able to capture the opportunity that's there, because ER&D can benefit and we can benefit from the ER&D hype cycle if we make the right investments. So you will see margins at this 17% levels in the medium term, and then 18% is aspirational from there on. Immediate term, we will make some investments in the business as we move forward. But again, the quarter to be played out, year to be played out as we move forward. But there is a clear earmarking of additional investments that we have decided to make in our business to be able to get faster growth and be able to gain more market share.
Okay, well, so the EBIT margins of 18% by first half of FY26, is that possible?
I would change that to say that 18% margins in the medium term. And yes, see, structurally we are there, right? Please understand, structurally we are operating in that zone. It's how much investment are you making back in the business to keep yourself relevant, right? And that's what's important. So yet again, we filed another 50 patents this year, taking the patents to very close to 1,300 right now. 50 plus patents filed in the AI area. So all this requires a lot of investments as we move forward. And we believe that this area of AI, software-defined everything, mobility, part of hyperscaler performance will require these investments as we move forward. So these are deliberative, planned investments with committed ROI being made internally in the company as we move forward.
How is the deal pipeline versus 1 year ago, and even the size of deals, because you seem to be winning larger engagements?
Yes, thank you so much for asking that. In fact, I'm happy to share that if I look at the whole year, the TCV booking is higher than what we did in FY23. Quarter 4 itself has been one of the marquee quarters for us. If I look at the entire FY24, we've signed 25 deals now that are more than $10 million, of which one of them, of course, was the Mahacyber $100 million deal. There have been 3 deals that are between 30 and 50 million. There have been 9 deals between 15 and 20 million. And then in addition to that was a BP empanelment, plus a second empanelment that was done last quarter, and another significant empanelment this quarter. So if you look at it, pipeline healthier, deal pipeline closures in line, and that's why we are comfortable with the guidance that we're providing right now for constant currency growth.
Okay, Amit, final question before we let you go. You spoke about concerns surrounding industrial and communication. When do you expect some kind of a turnaround? What's driving this weakness?
So industrial is a clear correlation to interest rates in the world economy. It has a direct impact. Read it like that. And if you look at, so that's number one. Number 2 on comms, we were all hoping that 5G would pick up and private 5G would pick up. Private 5G is not picking up anytime soon. So those two, if you look at it, though comms 5G is picking up, right? But those are different spends. I would put my bets, and that's why the focus that we've got, semiconductor, hyperscalers, media, 3 areas in the CMT segment, sub-segment that we've got. In medical wearables as well as Quora, and then SDV in mobility, and plant engineering and sustainability, I believe, will be our key winners as we move forward into Q1 as well as through the year in FY25.
Okay, thanks a lot for that. All the best for the quarters to come.